Is your wife entitled to half of your business in a divorce case? So if you're a business owner, this is a concern, assuming you've been married for a few years, more than 10, for example, and you own a business, and assuming you started this business during your divorce, it could be an issue in your divorce case. It's possible that your wife is going to be able to claim half of your business. She's a partner in this business, even if she never did anything towards it or never did any of the work, or isn't on, her name's not on the business. Even with all those things being as they are, you could still expect that your business is an asset. It's something to be divided in a divorce case, just like a house or a car or a bank account or a retirement account. It's an asset. Sometimes it's the most valuable asset that people have is the business that they own and that they've started. That can be the deal. It's easy for a business to be worth as much as somebody's house sometimes, depending on how much income it generates and what the history is. And don't forget to like the video, subscribe to our channel. I'm attorney Brent Boyer. We do divorce and family law, and try to answer people's questions, get things out of the way for them on YouTube. So yeah, this idea of owning a business, if you've started this business during the marriage and you own it, whether it's you're a dentist or a doctor or a landscaper or a roofing company, whatever it might be, if you own this business, especially if you're the sole owner, you got to expect that entire business is an asset in your divorce case, and it's going to be subject to being divided. That's assuming, like I said, that you started it during the marriage, so we know it's what they call a marital asset. It's something from your marriage. You didn't have it before. And you got to look at what the value of that is. If you're making over $100,000 a year doing this work, that means the business itself has value. It's sellable. Now, people will talk to us about, well, there's really no way for me to sell this business. It's just me. Without me, it really doesn't exist. Like, let's say a dental practice, if it's just one dentist, you could say, well, if I retire or I decide I'm not going to do this anymore, the business doesn't exist. Well, that may be, but it does still have value. A business is going to have value beyond just what the assets are. Like a law firm, which we see, law firms have value. It's not the desks and the furniture and the stuff. Those things really aren't worth that much. It's the goodwill, it's the clients, it's the brand name, if there is one, that has the value. And then if that attorney is getting divorced, that law firm has a value. It's an asset. And so then they got to look at, well, how much is it worth? And then how am I supposed to pay my wife for her share of that asset? So, let's say it's a construction business, and you're making $150 a year doing this construction work, and you're the sole owner and you started it during the marriage. That means it has a value. Now, knowing what you make as annual income doesn't necessarily tell me much about what the value of that business is, but it's not zero. And a lot of times it can be worth as much as your house or as much as a retirement account. So, if I own a business, if I own this construction company that's worth $500,000 and there's really no debt on this company, then I got to look at, well, if I'm getting divorced, my wife has $250,000 coming. She's got a right to half the value of the business. There are certainly more complications that can go along with that. For example, if I'm paying child support or spousal support and we're using that income from that business, and I'm self-employed, we're using that income from that business to determine child support numbers or even spousal support numbers, then we do need to take that into account when we're looking at the value of the business, because it's not fair to give my wife half the value but then also use the entire income when we're talking about child support or spousal support calculations. But these are all things to be considered. But you look at the value of the business. There's people that can tell you what it's worth. There are people that do that for a living, accountants and those types of people that value businesses. So it's an ascertainable value. It definitely has a value. Just getting like an appraisal, just like you can get an appraisal for a house, you can get an appraisal for a business. So if you don't know what it's worth, and your wife certainly has no idea what your business is worth, then you get together your documents, your profit and loss statements, your tax returns, whatever it is that we have that shows the clients, the revenue, what kind of money's coming into your business. And it can be that data can all be analyzed, and you look at it and you determine a value. Say, okay, well, this business is worth $500,000. So now I owe my wife half of that number. I got to come up with a way to get $250. I got to take out a loan. I got to make payments to her, whatever it is the two of you agree on. And then another way to do it other than an appraisal is to just reach an agreement. If you and your wife can agree on the value, if you can agree on what your business is worth, what that asset is worth, then that's good. Then you use that agreement and you go forward that way. And if you can agree on how she's going to be paid for this buyout on this business, all the better. That's great. When you run into trouble and you can't agree on it, or sometimes people just have no idea what something's worth, then you got to hire an appraiser, and then that's just part of your divorce process, is paying the expert to figure out the value of your business. They figure out what kind of income it's generating. They look at your income and see how that fits into this whole equation, and you go from there. But I think there's this misunderstanding, or kind of this myth out there that if I'm self-employed, that business doesn't really have any value. What I'm doing might be a landscaping company or a plumbing company or a construction, whatever it might be. If I own it and I'm self-employed, it has value. If I'm working for if I'm a W-2 employee at GM, we can all agree that doesn't have any value. That's a job. But if you're self-employed, now you got something that has value. Now it has some worth beyond just the income that you get. It's a saleable asset, even if it seems like it might not be. And then it has some value, and somebody can determine the value. So that's what we're looking at when we're looking at divorces, and we have somebody that's self-employed, owns their own business. We got to figure out not only the other assets, we got to figure out what the house is worth, what the bank accounts are, the retirement accounts, whatever it is. We got to look at all that. We also got to look at that other asset that's sitting right there, which is the business that they own. If they're self-employed, they own an asset. They might not feel like it, or they might not see it that way, but it's definitely the case. And if your wife owns a business, it's the same story. Whatever she's doing self-employed has some value, and it's something that then you would get a part of in a divorce case. Same deal. It's not based on gender. It's whoever's the business owner is looking at in a divorce, they're going to have to potentially split things up. So hopefully that helps. Thanks.